Blackstone, one of the largest asset management companies in the world, is warning you that there will be a lost decade of equities appreciation. Furthermore, they're stating that there will be anemic equity returns over the next 5 to 10 years. If you have a 401k, your 401k is tied to the stock market, which is mostly equities. And in this video, I'm going to show you step by step how you can escape this long decade of anemic returns and turn your 401k into $1 million. If you want to hear more, then run the clip. Welcome back. See, markets follow cycles. The stock market particularly follows a 5 to 10 year cycle. You'll have 5 years of a bear market followed by approximately 5 years of a bull market. In 2021, we're currently very close to wrapping up the bull market. That is why this warning is coming from Blackstone, where they're stating that the next 5 to 10 years could have anemic returns. See, if you have a 401k, that means that the 401k is usually invested in stocks. So your 401k will be tied to the stock market. And being that the stock market is currently at an all-time high, once we go into a bear market, you're simply going to watch your investment start to shrink. And why would you watch your investment shrink from all-time highs when you could simply jump into another asset class and ride that up all the way to eternity? See, this is what the crypto market looked like just a year ago. And I'm not suggesting that you start gambling on Bitcoin. However, you can position yourself in an asset class that is significantly undervalued. And if you do that, you might set yourself up for some monstrous gains. But first, let's do a little bit of background on Blackstone. So who exactly is Blackstone? Blackstone is one of the largest asset management companies on the entire planet. According to their website, Blackstone is a leading global investment business investing capital on behalf of pension funds, large institutions, and individuals. Our mission is to create long-term value. Keyword there, long-term value. Long-term value for our investors through their careful stewardship of their capital. We invest across the alternative asset classes in private equity, real estate, credit and hedge funds, as well as infrastructure, life sciences, insurance, and growth equity. Our efforts and capital grow hundreds of companies and support local economies. I want you to look closely at how much private equity they have invested. They have about $198 billion, which is not a small amount. And also, keep in mind that they're stating that they invest capital on behalf of pension funds, large institutions, and individuals. See, if you have a 401k, then chances are that you're probably working in the corporate environment, possibly for a large institution. A lot of these large institutions don't actually invest directly for their employees. They go after companies such as Blackstone, which invest capital on behalf of large institutions and individuals, and they're the ones that pick and choose which stocks to invest your money. And now that we know exactly who Blackstone is, let's look into the warning that they're giving about the next 5 to 10 years. Blackstone warns of a lost decade where stock market returns are anemic. Now, the last thing you want to do at a time when the stock market is breaking records and all of the stocks, well, almost all of the stocks are at all-time highs, is watch your investment simply dwindle down and shrink. Why don't we watch this video that was put out by Blackstone so you can have a better idea of what their analysis is for what's coming.
Stark disconnect between Wall Street, and we've seen all-time highs in the middle of a pandemic, and Main Street. Economic fundamentals, I've got to say, still look quite shaky, and many Americans are waiting for their next stimulus checks. Is excess liquidity part of the problem here? Is that creating this divide? And are the Fed arguably to blame for this?
Well, Sri, let me rephrase that. The simple answer is yes, but let me rephrase. I'm not sure excess liquidity is how I phrase it. I think zero interest rates is the driving force here, near zero interest rates. And there's a hunger for yield. So investors are coming off the sidelines. There's still a lot of money on the sidelines, actually, and looking for investments where they can get some kind of return. They've piled into government bonds. Now they're piling into riskier bonds, and spreads are coming in even further, and will continue to, in my opinion. But at the same time, they're moving into equities because there's just nothing else you can put your money where you're going to get a return. So yeah, I think zero interest rates, near zero interest rates, are the driver here. Is that excess liquidity, or is that an appropriate amount of liquidity for the problem we've had? I think you'd have to give the Fed a lot of credit for managing this problem and stopping it from spiraling out of control. So I don't think it's excess liquidity, but it's abundant liquidity for sure.
Okay, and notwithstanding last week's correction, the markets continue to climb the wall of worry. Do you think that there is still too much euphoria in the markets, especially when you look at the Nasdaq and the big cap tech and the valuations there still looking arguably quite stretched? And all in all, do you think this is a market that is really underestimating the risks that are out there?
Well, for sure, the market feels very fully valued. In my opinion, it's a little ahead of itself, but I think it's supply and demand. As I say, capital continues to run in there. There's also a little bit of a fear of missing out, a little FOMO in there, where everyone's made a lot of money in the market this year and people are piling in. And so I think in the short term, you'll continue to have that momentum. Long term, though, I think the market will feel very full over a sort of 5 to 10 year horizon. I think this could be a lost decade in terms of equity appreciation, both because at some point we'll have interest rates normalizing somewhat, or at best stopping the further decline on the one hand, and then there's plenty of headwinds for corporate earnings. There's higher taxes, their operating costs because of COVID are up, their supply chains are going to be less efficient, deglobalization will hurt productivity. State and local employment will be under pressure because of the deficits. All of that will be economic headwinds, and for companies. So I think you can have disappointing long-term earnings growth with multiples coming in a little bit, and I could see anemic equity returns over the next 5 to 10 years.
Now that we understand the risks that we're facing in the economy 5 to 10 years from now, the anemic returns that are likely to happen in the stock market, ladies and gentlemen, I would like to formally introduce you to I Trust Capital. See, I Trust Capital gives you a variety of choices in investing in different kind of assets. When it comes to the stock market, you're going to be limited in how much control, especially if you're invested through your 401k, you're limited in how much control you can have as far as the specific companies that you invest your life savings, which is your 401k. See, the company that you work for goes to another company, which then invests your hard-earned money into whatever stocks that they decide to. You don't have the option to decide which stocks align with your beliefs. You don't have the option to decide how much to put into which stock. Ladies and gentlemen, it is about time that you start to take control of your finances. And you can do this. And by the way, this is not financial advice. This is simply for entertainment and educational purposes. However, let's continue. You can take control of your finances and decide exactly where and how much you want to invest. We've already covered that the stock market is at the very top of its market cycle. It's very difficult to be able to time the very top, but we know for a fact that the market cycle has been bullish. It's been going up for the last 5-6 years now. And as much as we want to be positive about where things are going, even Blackstone is warning you that the drop is imminent. It's coming. The last thing you want is to go from a portfolio that is sitting pretty, a portfolio that is at all-time highs, and then just watch it dwindle. What I'm suggesting, which is what I'm doing, is simply pivoting. Pivot from the assets that are overvalued and are at all-time highs, and pivot into assets that are undervalued. Assets that are going to be appreciating, especially for the long term. See, the economy has changed. The economy is not what it used to be. The economy is now digital. So why not start to consider investing in more digital assets that go with the narrative of where we're headed? Some of the digital assets that are available on I Trust Capital include Bitcoin, assets such as Litecoin, Stellar. See, as far as I'm concerned, I like to invest into deflationary assets. Assets that have a limited amount. And when it comes to deflationary assets, silver, for example, is an asset that is limited in supply, but also has utility outside of just jewelry. You know, you can look this up on Google, where you can look up other uses for silver. But assets such as silver are bound to go up because, one, there's only a set amount. And two, there's actual use cases for silver. Now, when it comes to I Trust Capital, see, you can move your 401k from the stock market simply by contacting your HR department and telling them, hey, I would like to change my 401k from what it is now and move it into another option such as an IRA, a traditional IRA. If you have a financial advisor, this is something that you might want to talk to them about, because I'm not a financial advisor. I'm just telling you what I'm doing. I'm giving you suggestions for where I think things are going to be looking up, where the upside is. And you don't have to follow what I'm saying, but I'm going to show you the numbers. Because investing is about your return on investment. It's about percentages. And if you're already at the highest percentage you could probably get to in this market cycle with the stock market, why not take that and then invest into another asset class that is just now starting to move up? And you can simply do this by pivoting your 401k from the stock market and going into digital assets and precious metals through iTrust Capital. As you can see here, I would recommend that you open up an iTrust Capital account. Contact them, ask them any questions that you might have, or contact your financial advisor. But you can simply set up an IRA, which online takes minutes. You can then fund your IRA using the money from your 401k. And if you get into the digital assets, which, as you have seen in the previous screen, is quite a variety of them, from cryptocurrency to precious metals, then you can set yourself up in the next 10, 15, 20 years for some monstrous gains. The reason I say that is because the percentages is what matters. The percentages. And if you look at the percentages when it comes to digital assets, Bitcoin, for instance, see, Coin Paprika is a website that gives you more information about cryptocurrency. And if you just go to coinpaprika.com, and remember, we're focused on the long term. We're not looking to just gamble or speculate on asset prices like Bitcoin. We're looking to get into an asset because, one, we believe in the utility of the asset. That is probably one of the most important things to consider while looking into any investment, especially digital assets. Bitcoin, for instance, is said to be a store of value. Bitcoin is supposed to be a currency. Now, I'm not looking into Bitcoin because Bitcoin at the moment is going for $56,000. And remember, my opinion on investment is about the percentages. I'm looking at how do I get from 100% to 1,000%. And the likelihood that an asset that is already at $56,000 to go up another 1,000%, I just don't see that happening. And if it does happen, it's going to take a long time. However, if you just look at the market, generally speaking, a lot of these assets are up by way more than you would ever find in the stock market. Look at Bitcoin. It's up 977%. Ethereum is up 1,428%. XRP is up 219% in the year. VeChain is up 3,135%. I mean, You're not going to find these kind of percentages in the stock market, especially in the next 5 to 10 years. Just like Blackstone is telling you, the stock market is going to be anemic. Now let's talk specifically about one asset that we could look into that is listed on iTrust Capital. Which again, this is not financial advice. We're just looking at options of how we can keep our hard-earned money growing rather than going anemic. And one example of an asset that is on iTrust Capital is Stella. Stella is one of the assets that I have identified. And I'm not suggesting that you go and buy Stella. This is just an example of one of the assets that if you were to roll over your 401k into iTrust Capital and you decide today that you're going to purchase Stella, let's do the math. Because like I said, investing is really about the return on investment, which is about the percentages. Stella is currently, according to Coin Paprika, it's ranked number 11. Its ticker symbol is XLM. Currently, the price is going for 39 cents. Show me an asset on the stock market that is going for 39 cents. And if you look at the return on investment on Stella in the last year, Stella is up 980%. Imagine that. Still currently at 39 cents, but it's up 980%. Wow. I mean, what else? What else can you say about that? 980%. So let's look into Stella a little bit further. See, Stella, according to their website, stella.org, they have a press release from February 2nd, 2021, stating the USDC, which is the United States digital coin, is live on the Stella network. Remember, ladies and gentlemen, we are focused on utility. We are focused on assets that, one, are deflationary, have a limited amount, and have utility that is going to take us into this digital world. Now, as much as there's a lot of US dollars that are being printed, it's very difficult to bet against the US dollar, because history shows that the US dollar has always, almost always, came up on top. And as much as it's been printed to oblivion, you also have a pivot that is happening. A pivot from a physical paper US dollar into a digital US dollar. And that's what you're looking at here, ladies and gentlemen. You're looking at the USDC, which according to the Stella website is the world's leading digital dollar stablecoin. And it is now on Stella, the Stella's decentralized exchange, and it has 6 stablecoin pairs and is available through 5 Stella integrated wallets. According to their article, it further states that Stella USDC pairs, the world's leading digital dollar stablecoin, which has seen over 1,000% year-over-year growth, and now has nearly 6 billion USDC in circulation, with the Stellar network, an established and proven blockchain. I'm not sure if you've heard about blockchain, but blockchain technology is the underlying protocol that is used on the Stellar network that is hosting the United States digital coin. And this is news from February 2021. It further states that more than 1.5 billion total operations, and last year saw a 104% year-over-year growth in total payments on the network. Now, when it comes to utility, this is what we're looking for. Not financial advice. But if we're going into a digital world and you're thinking about rolling over your 401k at all-time highs in the stock market, an asset such as Stellar, number 11 ranked digital currency, XLM, which is valued at 39 cents. 39 cents, ladies and gentlemen. Now that is the smell of opportunity. That is what monstrous gains sounds like. 39 cents for an asset that is leading the digital dollar stablecoin. Now, like I said, this is not financial advice. And as I cap this video, I would like for you guys to give it some thought. That looking at the warnings that we are receiving, maybe it's time to pivot from the stock market, which is almost guaranteed to go down at some point because it's been going up and up and up and up and up for the last 6 years, breaking record after record. So now that you're at all-time highs with your investment, why not position yourself for what's coming? Position yourself, especially with your hard-earned money. See, for a lot of us, for a lot of millennials, you still have about 20 years before you can cash out your 401k. And if you cash out early, you have to give up a significant amount through taxes, maybe even 40%. What I suggest is simply, especially if you just got laid off, don't cash out your 401k and spend it on shopping. Don't cash out your stimulus check and spend it on boots and hats, shades, fragrances. As much as I like people that smell good, I got nothing against people that look good, but we gotta set ourselves up for what's coming, which is the digital economy. And there's no better way than doing that than simply transferring your 401k from an all-time high stock market into the new digital economy, especially now when it's undervalued, because these prices are not going to be available in 5, 10, 15 years. We've all seen how far Bitcoin has come. At one point, Bitcoin was 39 cents about 10 years back. And now that we are starting to see this utility, you're seeing the US dollar coin being hosted on the Stellar blockchain. And I'm not saying go buy the Stellar blockchain. That's not what I'm saying. There are many different assets to choose from. I just picked one so I could demonstrate where things are going and give you a reason to make this switch. Now, if you like this kind of content, go ahead and follow Top Shelf Investing on Facebook. If you're watching this on YouTube, make sure that you like and subscribe so you can get notified when we put out more videos. But with that being said, this is Sean King, and this has been Top Shelf. We'll see you in the next one.